For 65 years already, 3M increases its dividend from year to year. But impending penalties in the billions are worrying shareholders. Will the dividend be cut or even eliminated altogether? Or is a 6.1% dividend yield a special one-time offer? My opinion in this video. My name is Thorsten Tiet. I'm the founder of Dividend Stocks Cash. It's all about investing in quality stocks to profit from long-term capital gains and growing dividends as well. And if 3M is still a quality stock and if dividends are safe, we will discover in this video together. So let's start. Choose 3M, fundamental analysis, quick glance. Because if we see here the adjusted earnings, and then we discover that we have a lackluster performance, fundamental performance for 4 to 5 years already. So 3M already has its own problems, which got even worse due to a recession and high inflation and other things. Other companies are also faced, but 3M has special problems. And if we look at the latest quarterly report, then we see that through all segments we have negative net sales from about -3 to -5.5%. But the main problem for 3M gets obvious when we look at the reported earnings. Then we see that we have losses here, and this is due to accruals for litigations. One time the defective plugs, and the second time for the forever chemicals, which are polluting the environment, drinking water especially. And if we take the penalties, and then they endanger the dividends, because the dividends just by the normal business are not endangered at all. We can see it here. If we look at the free cash flow, then we see that the dividends are still covered. Don't ignore what the analysts say for the negative free cash flow here, because it's very difficult to estimate the free cash flow. It is just negative here because some analysts mean that the penalties will be so cash flow or so high that the free cash flow will already be negative in this business year. I do not agree with this. I will make my own calculation based on everything we know. At least when I say we know, this is our analysts and myself included, because we also analyze stocks. And what you see here is a very important table. It is in German, don't worry, I will translate it for you. We have 2 litigations, one time defective earplugs, second time forever chemicals. This is the first line, earplugs, second line is forever chemicals. And what we know so far are agreements still pending, but these are plans, these are payment plans for the penalties. This is what we know. And we even know for the defective earplugs, the negative cash flow, respective the payments from year to year, 3M needs to do to resolve this issue. For example, this business year, 23, 660 million and 650 million, 1.1 billion and so on. And this sums up to 5 billion. It is 1 billion more, even it is 6 billion, 1 billion, but 1 billion in stocks. So this in stocks doesn't matter for the free cash flow. And then we have these forever chemical penalties, which is, according to what we know right now, 10.3 billion. We still don't know how this will be paid from year to year. So we just assume that 3M pays it equal right now, which is about 800 million each year. And if we sum up, we have the total penalty here from year to year. And then we check what remains, or if 3M is, as a company, is strong enough still to pay dividends with these penalties. So how to do this? We look at the free cash flow. And free cash flow especially in the future. We need to estimate this, and we estimate no growth at all. You should always see $8 each year. Why $8 each year? This is because if you look at the free cash flow here, we see that around $8 was the norm from 2040 to 2018. Then came Corona. We skip this. We are a little bit more careful. We don't calculate this into the average, and the last 4 quarters was $8 as well. And as I said, ignore what analysts estimate here. So I think $8 is a conservative guess, especially if we have assumed no increase. And what we can do then, so we have the free cash flow, we have the payments, absolute payments in millions, and then we can transform these payments on a per stock level. This is this. So you see how much per stock needs to be paid on the penalties. And then we have the dividends, of course. This is what's very interesting for us, the dividend payments. And then we see here coverage or under coverage of the dividend payments. So always if it's red, dividends are not covered anymore. And we have 1, 2, 3, 4, 5, 6 years with under coverage of dividends. Does this mean that 3M is going to cut the dividends? No, not automatically. I think management wants to keep the status of a dividend aristocrat, and they will fight for this. Can they win this fight? For this, we need to check if the balance sheet is strong enough to cover the shortage here of the dividend payments. Let's see. I calculated here, we have the number of stocks as 554 million. You can also see it here, 554 million is outstanding stock. And now we just need to translate the under coverage into the per share, into the absolute amount of the 6 years, sum it up, then we have close to 3 billion under coverage of dividends. Can 3M cover this by the balance sheet? 3 billion. Let's check, and we can check this very fast. I just select what's important for us. This is liquidity, and liquidity right now, last 4 quarters, is 4.3 billion, which is more than 3 billion. So 3M can cover with the amount they have right now 6 years of under coverage, we assume right here. So this means, from what we know so far, if the litigation or if the penalties won't considerably increase, that I think dividends will not be cut. This is the first message. Second message I want to convey is 3M attractively valued? Is it a buy? If you look at the current dividend yield, of course, looks very attractive with 6.2%. Even during financial crisis, we only had a dividend yield of 4.4%. So it's close to all-time high right now. And let's check about the expected capital gains also and total yield we can expect if the buy is a stock today, and we can make this here. We have different fair values. We have a fair value dividend also. I rarely use this, but in this case I think it really makes sense to use it. If we select the fair value dividend, you can see this here, and the fair value out of the box would be close to $200. 3M already cost as much as $250, $260 even back in 2017 and beginning of 2018. But this is calculated using an average dividend yield of 3.1%, which is not representative anymore right now because we have sluggish earnings growth. You can see it here. Here it was still dynamic, and now it's sluggish. First, and second, the dividend increase is sluggish as well. No wonder, because if there are no growing earnings, then there are no growing dividends as well. Okay, I think that investors who are going to buy 3M buy the stock because they are attracted by the high dividend yield. How high dividend yield needs to be still to be attractive. I think about 5% would be okay. So we see that the fair value dividend now decreases. Let's zoom in a little. There are no estimates for the business year 26. It goes up to 25. Their fair value is 130 US dollar and current stock price is slightly below 100 US dollar. If we calculate the expected yield and if your annual yield till 25, end of 25 of close to 20%, total yield of about 50%. Here you see how much capital gains and how much dividends we might expect in absolute amount. And is this fair value plausible? I think yes. Let's check if we take the fair value for the adjusted earnings. This is this one. We can also regulate it down because this price is calculated this fair value by an average of 18.4. We can lower it to 13, for example, and then we have a match between these two fair values. So if you say that 13 is still justified, a price earnings ratio of 13 on the adjusted earnings is still justified, then you would accept that you have a fair value of between 130 and 135 in the year 25, and then we have about the same expected yield I just showed you. So I think 3M is attractively valued right now. Everything depends on this, if the penalties will be considerably higher or if this is all. If this is all, then I think that 3M really is an attractive stock for dividend investors and a buying opportunity right now. So what's your opinion? You feel free to comment below. Thanks for watching and see you next time. I hope that I will do more videos on this channel in the near future. Okay, ciao.